Welcome to the Business Outlook Survey press conference call. I'm Tom Elliott with the Public Affairs Department. With me today is Mike Treving, Senior Economic Analyst with the Research Department. Today, we're going to talk about what manufacturing firms had to say about business activity in November. First, Mike will give us a summary of today's report.
Thanks. Results from our manufacturing survey this month suggest that regional manufacturing activity continues to expand, but at a slower pace than in last month. All of the survey's broad current diffusion indexes were positive, but recorded lower readings than in October. Price indexes had a mixed performance. On the cost side, input price pressures were somewhat more widespread, but for final manufactured goods prices, fewer firms on balance reported price increases. After increasing in recent months, employment was virtually flat among the reporting group this month, and the broad indicators for future activity continue to reflect optimism about growth over the next 6 months, although most of the indicators fell from their higher readings in October. And I'll point out that we did have a special question this month about firms' rate of capacity utilization. We asked them to compare their current rate with 1 year ago and also their plans for capital spending over the next year.
All right, thanks, Mike. We'll open it up for questions. Ellen Froelich, Reuters.
What about the employment component?
Yeah, we had a flattening out of the number this month, down to closer to zero. We had some more positive readings the last few months, but it's like a drop in the share of firms reporting increased employment from about 23% down to just 13% this month. So we're reading that as pretty much steady employment, although we did have, on balance, declines in the average work week among this group. Although I'll point out that on their 6-month forecast, we had still about 35% of the firms expecting employment growth over the next 6 months, and that was just down a hair from the previous survey. So those numbers are still holding up.
Okay. That might have been something that the market was particularly interested in because one thing the market is focusing on is the November employment report. The one that's released in December for November.
Right.
Because that, of course, will be the last report before the December FOMC meeting.
Yeah, the employment number pretty much moved in the same direction as all of the other broad indicators this month. Activity orders, shipments, etc. But still positive, but just not nearly the higher readings that we saw the last couple months.
Okay. Any comments or anything that anybody made? And remind me again, what was the special question about?
We asked for their current rate of capacity utilization, and compared to the same time last year.
And what did they say?
The average rate was about close to 78%, which is a little bit higher than the reading we have on the national numbers. And a change of about 2 percentage points from last year. So some closing.
76 about last year?
Yeah, we calculated it to be about 76% from the responses that we got. And then we did ask them about the capital spending going forward, and we had just slightly more firms expecting to expand or increase their spending over this year. 29% compared to 23% expecting it to decline. And then we broke out...
To increase their spending in 2014 over 2013?
That's correct. That's correct. So, not really strong numbers, but then we did also break out the relationship between their responses and the current utilization rate, and found that not too surprising that the firms that were going to increase capital spending, had
the higher utilization rate.
Yeah, by about 9 percentage point difference from those decreasing. So that's not too much of a surprise, but it was.
But it's a way of verifying.
That's right.
Side, or corroborating.
Right, and that was consistent with the comments that we got on that special question too. That some were not sure about their forecasts for next year, and the uncertainty was still having some bearing on their planned expenditures for capital next year.
Yeah. All right. I think that's it. And thank you very much for your patience.
Thanks so much, Alan, for calling in.
Tom and Michael.
All right,
And
bye-bye
have a
now.
great day.
Thank
Yeah.
you.
Bye-bye.
Okay, bye.
All right. Well, thanks for watching this month's Business Outlook Survey press conference call. Look for next month's survey at 10 a.m. on Thursday, December 19th, 2013.